if Bitcoin's worth $2 million, which I think it is in today's dollars, not because of my CDS model, but actually because of a total addressable market calculation. If you're messing around because you're waiting for Bitcoin to go to 21,000 versus buying it at 29,000, you're the stupidest asset manager on the block, okay? I am very impressed with the way that Bitcoin has traded in light of the Luna collapse. I believe that 3 years ago, and this is just an opinion, that 3 years ago, if we had absorbed this type of hit, which is plus minus $50 billion being vaporized out of the digital asset space, including the fact that that digital asset was holding some Bitcoin as collateral, and they had to sell $3-ish billion of Bitcoin, that Bitcoin would have fallen a lot more in price. And that's a credit to a number of things that it didn't fall in price, to things like short interest in the market, which people could argue, you know, the cash settled futures is not good for Bitcoin price. Well, some of that bid was certainly short covering. Others were disciplined buyers of Bitcoin at various price levels. So what gets me upset is people saying that the price of Bitcoin is down and not considering external factors. Firstly, the Luna collapse, and then secondly, the fact that the NASDAQ is down 30% from its all-time highs as well. So I get upset that people don't understand. They look at Bitcoin in isolation to other assets around the world, and that's just not how financial assets trade. And I will just tell you that this, in my opinion, was a growing up moment for Bitcoin over the last, call it 3 weeks. So what gets me upset is people don't appreciate how big an event this was. And someone's just saying, yeah, Amazon's down 50%. Look, you can run through a whole bunch of different comps and just realize that Bitcoin is down from its all-time high, correct? But by the same token, the value of Bitcoin has actually increased by various different calculations. We can talk about that later. And the price is hung in there, in my opinion, very maturely, meaning it's a big boy asset now. Here's what I would say, though, that Wall Street is 99.9% takers, and the Bitcoin community is at least 85% givers. The other 15% are populated by, you might have called them Wall Street rejects, who still have that 99% taker in their blood. I will hold off in terms of blaming certain individuals, but they should have known better. Luna was the fiat Ponzi digitally designed. Luna was the debt, and the token UST was the currency. And this whole thing was designed exactly like the fiat Ponzi. And you tell me that people couldn't see that a bank run would occur and that absolutely the confidence in the system would implode? This was a beautiful Lehman moment for the crypto industry. And I don't use that name favorably, for the crypto industry. And guess what? No Fed bailout, no nothing, traded 24/7. TikTok next block. Let's get on with it. The whole system functioned absolutely as it's supposed to, including a digital fiat called Luna that went to zero because it was a piece of shit. So, next block. I agree that we are going to move to 5% inflation targets. I believe there will be a Federal Reserve restaking of their dual mandate, which is full employment and control of inflation. Well, those two dual mandates are somewhat laughable to begin with, because you can't have, if you try and control inflation at 2% when it's running at 8%, that means you need to jack up interest rates to a point where it causes a recession, and then therefore full employment is a fleeting goal, right? So whoever designed that dual mandate for the Fed was probably a grade 2 equivalent type of financier. At the end of the day, they're going to move the inflation target to 5% from 2%. They're going to basically monetize debt. They're going to have a yield on the debt that is going to be materially lower than the inflation rate. Over time, bonds are going to be the worst investment vehicle. Very simply, why? Well, inflation compounds, Brady. This is something that very few people take to the bank, okay? You can go from 8.5% CPI down to 6% CPI, and the Fed's going to call a victory because inflation is declining or disinflation. The funny thing is, though, after 2 years, one of 8.5% and one of 6%, you're essentially at 15% inflation. Bring it down to 4%, 3%. Over time, you could go into negative and actually deflation scenarios and still be way behind the 8 ball. You need inflation. They need inflation. They can't control it. If they do, it's going into a depression. This is not a soft landing. You might have been a little gratuitous in your definition. We are currently probably in a recession right now, and the Fed has only raised rates twice. They're saying they're going to raise another 7 times and stop quantitative or, do quantitative tightening. That QT is equivalent to another 4 additional rate hikes. So they're talking another 11 rate hikes. Don't even pretend that you're going to do another couple, let alone another 11 in total. The economy can't stand it. We will be in depression. And a final shout out to Max. Yes, Putin understood this. And guess what he's going to start doing, Max? He's going to start pricing his energy in Bitcoin, because Bitcoin is digital energy, and it makes sense to sell valuable natural resource commodities or energy for beautiful monetary energy. Why sell it for a worthless fiat dollar, petrodollar, that they don't even have access to when they get blocked on the SWIFT system? So many easy scenarios to play out here. I will also say, though, that if the US is done in 5 years, Canada should have been done 2 years ago, okay? And my precursor for the US to fail would be a G7 country. Unfortunately, my beautiful country of Canada will likely be the weak sister amongst the G7 countries that'll be the first to fail, primarily because we have a buffoon as a prime minister who says stuff like, the budget will balance itself. But at the end of the day, let's look at what Max said in the context of all other fiat countries. The USA will be the last fiat to fail. That is highly likely. The second to last will be the European Union, on the basis that Portugal, Italy, Spain, and Greece should have failed already. The question is, how long can this go? And nobody knows, so you always have to buy insurance. And this is what I want to point out. The percentage of global assets that are held in U.S. Treasuries has declined from 72% of foreign reserve reserve assets to 59% of assets at global central banks. Okay, so that's a meaningful decline, including Japan, that sold something like $60 billion worth of U.S. Treasuries in the last quarter. But can I point out that based on my model of it valuing the intrinsic value of Bitcoin using credit default swaps, Bitcoin is now worth over $400,000 US per coin as a insurance policy on a basket of global fiats, okay? This is a dynamic measurement that changes as the spreads or the credit insurance premiums change on default for sovereign nations. The USA still the market only charges the USA 16 basis points per year, which is equivalent to $16,000 to insure $10 million of US Treasury debt. You can accumulate all of these essential fiat risks. You can consolidate them. You get a value for Bitcoin as the most beautiful form of insurance against default on a basket of fiats. And one way I like to point out is, Max, you can essentially get the value of buying protection on the USA for about $1 trillion and you get all the other fiats for free. And guess what? The value of Bitcoin is less than $500 billion, which means you buy Bitcoin today, you get default protection on the USA and all other fiat currencies for free. Wow, what a deal. Ship it in. People don't understand what a beautiful asset this is, and there is no counterparty risk. You are not buying this from long-term capital management. You're not buying it from a Lehman Brothers or a Bear Stearns, two insurance sellers who almost went bankrupt themselves. One of them did. Point is, Bitcoin has no counterparty risk, and you can get protection on fiat currencies all across the world. The guys that are programming the algos in the big trading shops, they're correlating it to NASDAQ because they're looking through a rear view mirror and assuming that Bitcoin is actually a risk asset. No, Bitcoin is insurance. You just need to describe it to the proper analytical minds, and it hasn't made it that high up the ladder yet. So I think that, I've made some progress in convincing people that Bitcoin is insurance. It's a long volatility product. It is equivalent to owning default protection on a basket of sovereigns. If I was working at a hedge fund and pitching this a lot harder, like I did in my younger days, maybe I'd have more success. But right now, I'm just happy to spread it amongst the plebs, and it's sinking in. I guarantee you Ray Dalio gets this. Ray Dalio, though, needs to move billions and billions of dollars into Bitcoin, and he can't do it without moving the market. So, this is an incredibly cool concept. There are restrictions because Bitcoin is only still around a $600 billion asset, and Ray Dalio needs to buy about 600 billion of it. Okay. Do you think that wouldn't impact the price of Bitcoin? It's a bit of it's going to be sucking and blowing at the same time. Just understand though, that this will permeate the common thinking on Wall Street with the help of guys like Fidelity, who is actually doing some pretty good work on Bitcoin, in my opinion. You look your whole life for gamma. Okay. Gamma is this magical thing that you spend your whole life looking for, and it exists in Bitcoin, and these knuckleheads on Wall Street haven't figured it out yet. Why is the price of Bitcoin hanging in so well? Because everyone has a $21,000 buy target, and they feel like, shit, it's not getting down there, so I'm not going to be too smart by a half. I'm going to chip away at my position anywhere in the $20,000 handle. If Bitcoin's worth $2 million, which I think it is in today's dollars, not because of my CDS model, but actually because of a total addressable market calculation. If you're messing around because you're waiting for Bitcoin to go to 21,000 versus buying it at 29,000, you're the stupidest asset manager on the block, okay? It's a rounding error in the context of where it could go, especially, and here's the secret sauce, when the gamma squeeze kicks in. It'll go to your $200,000 price target overnight, Max, when one large company or big pension fund announces, $100 billion position in Bitcoin.